Greetings, members one and all of the Salivation Nation. A senior commodities trader at Deutsche Bank, caught with his hand in the cookie jar, admitted to telling newbies on how to manipulate gold and silver prices. Let's explore! Yes, indeed. This news comes to us from the Straits Times by way of Bloomberg. And very interesting indeed. You've heard me cover stories and other examples. And any chance I get, I want to cover these stories, especially given my viewpoint on manipulation in the precious metals market. This is another example of yet another bank. You've heard me talk about J.P. Morgan especially being caught doing this and spoofing trades. Indeed, this is what the jury just had heard during this trial. Fascinating indeed. And several members of the community made me aware of this. But a former Deutsche Bank commodities trader, David Liu, told a Chicago jury he learned how to manipulate gold and silver prices from the two successful senior traders he admired and worked with for about 3 years. He told this in Chicago. Liu said he wanted to be a team player and make money after joining the bank's Singapore office, so he began doing spoof trades the way he was taught by Cedric Chanu and James Vorley. The senior traders often placed buy and sell orders they never intended to execute, strategy intended to influence prices so they could reap illegal profits, Liu said. And that is the key thing here. It's always, criminal activity is almost always selfish. The motives are always selfish. It's about profiting personally, not for a greater cabal or anything of that sort. Vorley and Chanu are on trial for fraud and conspiracy, accused of issuing multiple bogus trade orders between 2008 and 2013. That's the time period we're talking about here. The case is the latest prosecution of spoofing trades brought by the United States, which has been cracking down on the practice since the so-called flash crash a decade ago. I saw Mr. Vorley and Mr. Chanu do it, Liu, a graduate of the London School of Economics and a prosecution star witness, said on Wednesday in a U.S. federal court. Liu, who has pleaded guilty to spoofing charges and is cooperating with the government in return for leniency, said he sat next to Chanu in Singapore from 2009 to 2012 and communicated daily on a live video chat with Vorley in London. While we knew manipulating prices was wrong, Liu said spoofing trades were so commonplace in the market and among his co-workers that he assumed it was okay. In one of the several trades Liu described in detail, he worked with Vorley in October 26, 2010 to push up gold prices. Keep that in mind. Push up gold prices, not down. And that's the thing. Many people think that manipulation always works to the downside, especially in silver. But it also works to push them up in other cases too. Liu said he put in an order to sell 15 futures contracts valued at around $1.8 million, and based on the prices at the time, while Vorley placed an order to buy 80 contracts, which would have been worth about $9.9 million US dollars. When prices rose, Vorley canceled his buy order and Liu executed his sell order, he added. Liu and Vorley and Chanu would often help him with the spam trades. If they saw he had an open sell order, they would put in a buy order to help him get a better price, exhibits presented at the trial showed. Such coordinated spoofing could also be done by a lone trader placing orders on each side of the market. Liu said he became so familiar with spamming, or I guess he probably meant spoofing, that he could tell when his colleagues were doing it. One day, on noticing that Chanu was making such a trade, Liu sent a message saying, "Be careful, Don't let the buy orders get into the market, according to a chat log in Liu's testimony. Vorley and Chanu contend their actions were legal, and that canceling orders is an accepted bluffing strategy in a competitive world of high-frequency trading, where computers use algorithms to execute massive trades in milliseconds. And really, you think about it, that's kind of scary to think about this high-frequency trading for sure, how that's happening. But keep in mind, utilization of such tactics, that means it can be programmed to be able to do that kind of stuff. None of the traders' actions was flagged by Deutsche Bank's compliance department, defense lawyers said on Tuesday. Since anti-spoofing laws were passed under the Dodd-Frank financial reforms in 2010, U.S. federal prosecutors have stepped up criminal cases, and the U.S. Commodities Futures Trading Commission has initiated more civil complaints. Even as far as we saw that with the RICO statutes for the J.P. Morgan cases we covered in the past on this channel. During cross-examination, defense lawyers sought to discredit the claim that Chanu and Vorley intentionally canceled trades. There's no button that says what intent is, defense lawyer Matthew Mazur said while questioning Liu. Mr. Mazur also noted that Liu must have been aware that his price manipulation was not legally. In an August 8, 2010 chat message to Chanu, Liu wrote, "'Cause Dodd-Frank's gonna get me fired. Haha," according to a transcript of the conversation shown to jurors. Yeah, it's kind of a flimsy argument. We know what the intent is, when they do that. But the thing is that this type of thing is not just limited to gold and silver. It's happening, and I heard this from discussion on these things, that all commodities are, they do it. If they can do it with pork bellies, they'll do it there too. It's about making money. It's just that gold and silver is close to our heart. So these metals here, well, we don't like to see them manipulated. We want to see real price discovery of these metals. But the thing is like I said, the price can be manipulated upwards as well. And it's in someone's best interest, in that particular case, for gold to be done upwards. But the high volume, high frequency trading, it does make you wonder. But you know what can't be manipulated? And that is the actual metal itself. That's right. This metal right here, silver, gold, these metals themselves, they hold a value that is constant when you think about through the course of history. And though there may be manipulation in electronic markets, make no mistake, the price that you buy and sell this metal in some ways is separated to a degree. We've seen it during the coronavirus situation and what we've been going through with supply chain disruptions and the like, so that you can have a price with a very high premium, and you may even recapture some of that premium at the time of selling a particular precious metal coin, such as the Silver Eagles have been going for premiums about $4 and over spot recently. Others as well. Sometimes you can get them. A lot of times the market dictates, the physical market dictates something that's much more realistic than what you're finding in the electronic markets out there. And that's what we're talking about. We're talking about these high frequency trades and how the manipulation can occur on there for ETFs, And by the way, I'm not knocking ETFs, but make no mistake, you are at the mercy of these manipulators when you do buy silver and gold on that level. But people say, well, Sal, you're at the mercy of the manipulators if you're buying physical silver as well, because the price is going up or down in that way too. True. Definitely a good point. But when you have the metal in your hand, you have freed it from the manipulating factor that is involved. And as long as you buy it with what I call smart dollar cost averaging, you average out your cost when you buy less of the metal when it's up high and more of it when it's down low, based off of what you're comfortable spending your budget. I would be very careful about putting too much money into gold and silver so as you don't go into debt and lose some sense of fiscal responsibility with your money. And but yes, indeed, and make no mistake, gold and silver are the truest form of God's money out there. But the dollar bills that you use, that's money too. It's money in a different way. but we call it currency, and we maybe call it weak money because of how the Federal Reserve is debasing it with more of this printing scheme that's going on. And really, in a sense, that's where the biggest manipulation is by the Federal Reserve and politicians that are calling for trillions of dollars in new spending and handing out checks like they're candy, and all while, saying that we should close all our businesses down, especially even now, even still right now, considering what's going on in the world. We want everybody to be safe, but also smart. We need to keep our economy going. But interesting news day, or news with this, with what's going on with Deutsche Bank. I have a feeling we're going to see other stories like this, and we'll see what the prosecutions are for these things. When we talk about prosecutions, usually it's a fine of some sort, and these people make lots of money, so usually these fines have very little effect. I believe there should be a law that if you do this type of thing in manipulation, jail time, actual hard time in prison, mandatory sentencing for these types of crimes, as well as a fine to be paid to whatever victims would be for these types of things. I don't know how you would necessarily disseminate that money, but there should be financial penalties as well as jail time. That will be motivations to stop it, to greatly reduce it, because their spoofing should not be happening out there. But there you are, gold and silver and manipulation. So post your thoughts below. Very interesting story indeed. Would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.